That's a pretty good deal, I feel like.
Yeah,
I do have a question.
it's gonna be very bumpy.
Yeah, I mean, I think anything, if you're talking about making money, is just going to be a risk in some way.
Yeah.
Taking a job is a risk.
Hmm.
But my question would be, you know, you said before you want to make sure you have basically all your ducks in line before you really start thinking about really growing a portfolio.
Hmm.
And then you just said 1,000 or 5,000 if you were going to buy. How are you going to split it, right?
Hmm.
Well, is there a minimum you think where you're if someone's like, oh, I can only do this much right now, you should be like, probably just wait.
No, not at all. That's the beauty of something like Fidelity and Robinhood is I think they will allow for a $1 minimum trade.
Yeah,
So
I think so.
you could literally put $10 in, do $4, and $2, and you know if you can invest $10 a week or $20 a week, do it. I mean,
Yeah.
it will add up over time, and it's more about establishing the practice and the routine nature of it. Like you don't think about it anymore; it's just something you do. And the Roth, you know, I wouldn't hold any. You'll read a lot about portfolio construction on the internet, and they'll suggest things like bonds and international stocks. You can include those if you want, but I would probably not put anything fixed income related in a Roth because of the tax-free growth. You know, if that portfolio averaged 10% year over year, every penny of that's going to be tax-free when it comes out. So you want to be as aggressive. To me, you want to be the most aggressive in the Roth. And I still think there's benefit in doing the traditional route. So that's why my wife and I, we do traditional through our workplace accounts, and then we still do the Roth IRAs on the side. And going back to the income piece, there is benefit in doing traditional. I don't want to make Roth sound like the best slam dunk win all the time. We're at a tax bracket where having that reduced taxable income is beneficial, and I do think there will be opportunity between now and our retirement to do something called Roth conversions. We won't go into that here, but there is benefit. There is benefit in doing traditionals. I know that there was a piece there that got really confusing when I was talking about that, the timing of it, which one makes more sense. And so I would generally suggest people to do both of them so you have different assets that you can use because we don't really know what taxes will be like in 30 or 40 or 50 years. We have no idea. We have a good
Yeah,
idea, but I think it's good to have a blend of the two account types.
yeah, and not to bring birds back in, but don't put all your eggs in one basket. I mean,
Yeah,
that
yeah,
applies to many things, and that can be, extracted to powerlifting as well. You got to
yep.
be balanced in all three lifts. It's not a
Hmm.
single lift event unless you're a, you know, whatever bench only person or something.
Specialist.
Yeah, quote
Yeah.
unquote. But yeah, that's good. And anyone that was just listening, if you pull this up on Spotify or YouTube eventually, you'll be able to see the actual stocks that Logan was talking about on screen.
Yeah.
I forgot to mention that, but yeah.
Yeah. Yeah. Then those
So
three, there are other. I mean, we have
yeah,
others in our portfolio, but I feel like those are three that are really transparent and easy to understand what they hold. And I feel like they all complement one another really well. There's not a ton of overlap. All of the stocks, most all of the stocks in SCHD are in the S&P 500 ETF, but they're going to be very small weighting because again, those big technology stocks reign supreme.
yeah.
So
When you suggest someone to do their own research, mainly it's to see what stocks they're exactly investing in when it comes to like an ETF or something like that,
yeah,
right?
yeah.
So what resource would you point people in the direction of to find that out?
Yeah, all of these, all three of those are big brokerage firms that have PDFs that explain, you know, what the ETF's objective is, and they publish usually quarterly updates, you know, any changes that happen to the portfolio. And all three of those are pretty passive in nature. There are actively managed funds where a fund manager is making decisions kind of at their discretion on what they want to include. And those are all very disciplined in their approach because they're SCHD and S&P 500 are tracking indexes, and the AVUV is they have a strategy they employ. It is there's no emotion involved. It's just picking the stocks that meet the criteria. So I would encourage people to go to the brokerage sites, do the research there. And then Morningstar and Seeking Alpha are two really good resources that you can do a little bit of a deeper dive into some of the metrics if you want to, or if you have any individual stocks, I would encourage using those resources as well. FinChat is another one that's you can pull up all sorts of financial information. I don't encourage. This applies to the 1% of people who want to have an individual stock portfolio. And I don't encourage that for, again, 99% of people. Just stick with the ETFs. Don't worry about individual companies. But if you do want to have an individual stock portfolio, FinChat is probably the best resource for that, because you can see all sorts of really useful information to help you look at the financial health of the business and help get a good idea if they're at an attractive valuation. Is it a good stock to buy now?
Did you define ETF?
Exchange traded fund.
Yeah.
Yeah.
Which
So it's just a
means-
basket. Yeah, just a basket of stocks that again track an index, or a fund manager is deciding what to include and in what percentages.
Oh, okay.
So,
Yeah.
Think about it it's like a mutual fund, but you can buy and sell it like a stock. So mutual funds, there's some unique characteristics of those that an ETF doesn't have. And then ETFs, you can also, I don't do this and I don't encourage people to do it, but you can trade options on those. So they're like a stock, very similar. So you can kind of think about it as a mutual fund that trades like a stock.
Gotcha. Okay. I guess kind of mention this. Is there anything like trendy that people should think about hopping in on besides just starting to invest?
It's one of those things. I think when the information, I think a lot of times when the information gets to people like us, it's probably too late a little bit.
Yeah.
And I've experienced
Well, yeah, it goes
this.
to the senators first.
Exactly. Yeah. We all just need to follow Nancy Pelosi's portfolio and
Her husband.
fly to the moon. Yeah. Her husband's really the brains behind the operation, I think.
Yeah.
But obviously she has a tremendous amount of influence and power. But yeah, I think there's always dissemination of information is probably a little slower to people like us, and so I think we probably miss trends. And so I think by the time we hear about it, you've probably missed the really crazy gains. Stuff like NVIDIA. If you bought them I remember looking at them in 2023. So we do have about 10% of our portfolio is in individual stocks. I call it a dividend growth portfolio. And that's where I'm most active. I'm making decisions about which stocks I want to include, what percentages do I want to trim the position, sell the position, how do I reinvest the income that it produces, how disciplined am I with my capital allocation. So I run that like a fund manager would, but the rest of the portfolio is just ETFs, 90% of it. But anyway, NVIDIA was a stock that I had thought about including in 2023. And I didn't really feel like it was at a fair value. It wasn't something I think it's a fantastic business, just like Costco. I think Costco is a fantastic business today, but I don't think that the valuation that it's at is a good short or intermediate term investment. I think that there could be downside in those stocks, and if there's any sort of market pullback or extended drawdown, I think companies like that would really get hammered because they will try to get back to a fair value. So to answer your question, do I think there's any hot, trendy stocks? I think that positioning yourself for businesses that will benefit the most by rate cuts is what I would say. So what businesses are most likely to benefit when the Fed starts decreasing interest rates? I would argue that those are probably real estate stocks. Those tend to be fairly sensitive to interest rate changes. And then more consumer-oriented stocks. Those have been pretty beaten down more recently. McDonald's, Starbucks, Nike got absolutely hammered. The brutal earnings call. Their CEO was like a deer in the headlights. It was not good. I've listened to a lot of earnings calls, and that was one of the worst ones I've ever seen. But anyway, so those businesses that have been most impacted by a pressured consumer, I think as interest rates start to come down, as inflation has continued to come down, those businesses will probably be positioned to benefit the most. There could be more short and intermediate term pain, but I probably would like those the most. The ones that are more interest rate sensitive.
Gotcha. Yeah, I think we're due for that very soon. Seems like
Yeah.
pretty much no matter what happens. Hopefully that does
I
maybe
think
first.
September. Yeah, I think September is. I would say it's almost a guarantee at this point. I think the question is, will they do a 25 basis points, 0.25%, or 0.50%? So I think they will do the first one in September. I think it's just how aggressive is it, and potentially two more. I think November and December they also do FOMC meetings. So that's where they'll convene and decide if they want to how they're changing their monetary policy. So I think we could see 2 to 3 rate cuts this year, and then I think probably 2025 there'll probably be a half a dozen, and 2026 they'll probably get back down to closer to 3%, 3% rates.
Sidebar, somewhat related, mostly related. Did you see I don't remember what his title was, but he's one of the chief financial guys of the U.S. doing his little news briefing the other day, and talking about how interest rates are. I think he was claiming something about them being 3% or maybe 3% lower than they were, or whatever. And someone had asked, like, why are you telling us the interest rates are lower but prices are still high, stuff like that. And he said, not everything's still high. The price of airfare is lower than ever. And all the comments said, we can't afford our groceries, and you're talking about airfare. It's just very, very funny.
Yeah,
In a sad way.
it is. Yeah, it's it has been. Yeah, I don't want to get too political, but I feel like it's kind of been their own doing to a certain degree, and I feel like the people that have felt the pain most are the people who probably couldn't afford to feel the pain the most, if that makes any sense. You know, it's.
Yeah.
I think it's created an even greater income inequality because people who have been heavily invested, who have a really good income, it didn't change anything. The stock market's way up. It's way ahead now of where it was prior to the tightening policy in late 2021. So if you had a lot of money and you continually invested, you're way ahead now of where you were 2 years ago. And people who are lower income, who don't really have any assets, are way behind where they were. So it's not good.
Yeah.
Not good at all.
Yeah. I mean, that's a different podcast altogether.
Yeah.
I don't know if either of us are.
I'm
qualified.
not an economist. Yeah.
Right.
Yeah. And none of these views or opinions represent the podcasts.
This is a non-censored event, so
Yeah.
no matter what people say on here will be up to interpretation of the listener.
Sure. Yeah.
So